Class example 2, going concern. Guys, you had 1.5 minutes to attempt this question. This is what you should have picked up in your reading time. You are currently busy with the audit of Electrix SA Limited, so it's a public company, for the year ended 30 August 2021. There's my year end. Electrix SA cash flow situation has frequently been a concern to its board of directors, largely because of a delay in payments from their significant customer base. So a concern in terms of their cash flow, this is a risk at the financial statement level. Is there a concern with their going concern because of their working capital? Always having an issue with working capital. And this is because there's a delay in payments from their customer base. Once again, another indication that there could be a concern with the going concern if their customers aren't paying. This in turn has resulted in Electrix SA breaching payment terms to suppliers. So if they breach the supplier terms, once again, could result in going concern issues if they actually lose suppliers because they aren't meeting the requirements. In addition, Electrix SA has come under severe strain from unionized strike action, resulting in significant operational downtime at various coal mines. So strikes, financial statement level risk with regards to the going concern because of the impact, so the downtime that they have as a result of the strike. During the current year, a new overdraft facility was renegotiated. So I'm going to make 2 notes here. They currently have an overdraft, which is a concern with regards to the going concern. And now they've gone and got a new one. Okay, so the current and now a new overdraft facility. This together with their drive to contact customers and request payment on all outstanding balances should ensure that the February salaries will be paid to employees timelessly. Okay, so actually having this new overdraft facility is giving them a bit of working capital so that they can pay their customers. So this actually allows for some cash flow, and so this is part of their plan to address going concern issues, and also this additional drive to contact customers so that they make their payment. So we've got 2 plans to address the going concern. The only issue here is that this is just so they can pay their salaries for 1 month on time. And so is that enough to make them a going concern, or is there still a concern with the going concern? Required. Evaluate whether the use of the going concern assumption in the preparation of the financial statements is appropriate. So evaluate means you've got to look at positives and negatives around the going concern assumption, and ultimately you're going to have to conclude. So guys, this was quite easy because the negatives are in your face. So the negatives, I'm going to say reasons why the going concern assumption is maybe inappropriate. Because they've got a delay in receipts from customers. They're breaching their supplier terms. Their strikes and downtime. What are the positives? This is reasons why it's appropriate, or any mitigating factors. Oh, sorry guys, before that we need to say that they have an overdraft, or they've already got an overdraft. So they've renegotiated a new overdraft so that they have got liquidity, and they are driving to contact customers for liquidity. So, is that enough? Either I can say they have a plan, therefore the going concern is appropriate, or I need to say the plan is only for 1 month. They've only got a plan to help with February salaries. And so, going concern is not appropriate. You guys need to understand you don't have to come up with a conclusion that's solid because you don't have enough information. So you've just got to use what you've got and work with that. And that could result in you giving 2 options, and that's perfect. Okay, so if you look at the solution, things are cast out, the delay in payments, the default in their payments to suppliers, the strike, the overdraft. Mitigating factors is following up with customers, getting some additional cash flow from this facility, and then 2 options in terms of your conclusion. Okay. So to summarize, guys, the types of questions you can expect for your subsequent events, they can ask you an accounting question, and often they do, where they ask you for the accounting treatment of the post-reporting date event. Guys, that is purely accounting. Follow your structure of accounting and you will get maximum marks. Or you could be required to audit the subsequent event. So then you've got to go and make sure that you understand it's adjusting or not. If it's adjusting, go and check that they've adjusted correctly. There will be a journal that you will therefore need to go and audit. Okay? And then discuss the impact on the audit report or the audit opinion. So this one often comes up. We actually have to go through that step-by-step process to first prove is it adjusting or not. Actually, to first prove that it is a post-reporting date event. Then to prove whether it's adjusting or not, then to consider did they adjust if it was, and then I give my opinion based on whether there's a material misstatement or not. In terms of your going concern, evaluate and discuss the applicability of the going concern. So here you're going to be looking for negatives to show that maybe they're not a going concern, and any positives, mitigating factors to show that they are a going concern, and conclude at the end of that. Formulate audit procedures, so you need to go and perform procedures to test if they are a going concern. So looking at those documents, that will help us to see what's happened after year end, because the going concern assessment is for the 12 months post. So that's how you know, oh, the procedures, maybe I've got to go and look at budgets, interim financial statements, minutes of meeting after year end, because they will help me to see what has happened after year end. Are they still continuing, and do they look like they will? And then the most common way it gets tested is the impact on the audit report. And then you need to open your standard and follow the step-by-step process in your standard, bearing in mind that there could be alternatives. If they do this, then yes, here's an opinion. But if they don't, then this is the opinion. So you don't just have a set opinion, because they could go and make the adjustments, or maybe they don't. All right, guys. See you next week.